We've been doing the Midas List since 2001, and for us, it's a barometer of risk-taking at the highest level. The technology sector is so dynamic, so much failure and huge success. So we want to know who's on top and who's taking the biggest risks and winning.
Well, the Midas List started in 2001, and we've been working on it and refining the system over the years. And it's become much more analytical and metrics-driven based on the actual return data from the venture capitalists. So we're getting data from different sources, and then we're verifying that with a lot of the venture firms themselves. We partnered with TrueBridge Capital Partners in North Carolina. They're a fund of funds, and they have a really deep experience in venture capital investing, and they know a lot of the firms in the Valley and have a lot of experience. And they help us a lot with the analysis of the data and what's happening in the industry.
One of the changes to this year's list is we also include post-initial public offering performance. We do that for two reasons. The first is to apply a discount to those companies like Zynga or Groupon that have performed poorly as public stocks, and to reward those companies like LinkedIn and Workday that have been very strong performers as public companies. Recent exits are more heavily weighted to make sure that we're accounting for who's truly driving value today. Some of the critiques we received for the list are ownership disparities and money multiples. For ownership disparities, we don't have the data that reflects whether an investor has 2% ownership of a company or 20%. In terms of money multiples, it's hard for us to judge whether it's better for an investor to have a 10 times return of their capital on a $10 million investment or a 5 times return of their capital on a $100 million investment. The more disclosure we receive from venture capitalists, the easier it is for us to correct for the list's shortcomings.
The list is primarily based on the hard numbers and return data, but we also have a super secret committee of limited partners and investors in venture capital, and we sit down with them and hash out every person on the list and all of the deals that that person has done, and they really give us some background on what really happened. Was that person really involved? Was it someone else who should get more credit? And they sort of verify that each person on there is where they should be on the list.
You can never know exactly how venture capital firms do because they don't release their returns to the public. And more venture capitalists have been telling us that they respect the rankings, and they ask us over and over again, when am I going to be on? When's it coming out? So we know we're getting close, even if it's not perfect.